Hello everyone, welcome back to the channel. Do I ever have a treat for you? $1,000 in profits or of profits. Full stack reversal. I've been calling it. I've been calling the gap fill, and today we're going to talk about that gap fill. It took some time. I'm going to link at the end of the video. You're going to see that full stack reversal video I made saying how to make $300 to $1,000 per day on Moderna, or just day trading. So this is what this channel is about: is to teach you or to show you how I make money in the stock market on a daily basis. Remember, this is not financial advice. This is just education and for entertainment purposes. We have a lot of fun here. We'll talk about a little bit of Elliott wave, some gap, short selling, and going along here on these massive dips, and then I share you my insight on how I risk manage, and we have a lot of fun and we make a lot of money. So let's jump into the chart. Remember, at the end of the video, there's going to be a little pop-up there, and you'll see the full stack reversal video. Check that out, and why I knew this was going to happen and what a full stack reversal means. So I pointed out a few things, to identify a full stack. So check that out later. So now let's jump into the chart. So we have Moderna here on the docket, and you can see it's filled the gap. And if you watch my videos, 80% of the time it fills the gap. So I did say that, we're probably going to fill this gap here, because 80% of the time we do. We didn't, right? We didn't hold long like we did the last few days because we had earnings. We don't want to hold overnight during earnings. That is common sense day trading. So I've noticed this huge move downwards, and so we are doing a options series to see if doing straddles and strangles is profitable. So if you want to check out those videos, go ahead. You'll learn about option trading. You'll see which ones I picked, the time, and how I analyze each company to determine what I'm buying, how long I'm holding, if I'm going to buy anything at all, because you'll see there's some videos that I won't be. But anyways, back to Moderna. So huge gap down on earning. We had full stack reversal, and now we almost filled the gap. So let's jump into a 15-minute chart to talk about what happened and what I want to highlight right away. Let me just fix this. This is a 15-minute chart, so every candle represents 15 minutes of time. At the end of the video, also, I will, I think it's in the full stack reversal, but in the last video I made here on November 17th, I said if we gap up around 247, and within the first 15 minutes we come into the closing price, that is a buy signal. And we made that $4 here, which and I said I would buy 60 shares, and that is $240 here. And then we're still holding my 30 shares here. I missed the 275 target by literally 25 cents. We're still holding that. We might sell that tomorrow. We're up $20 on that, so $600 on that one, plus 240 is 840. So we're almost at that $1,000 day, right? So if we count, we got into it here. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So that's roughly $120 per day if you count out all of these days here that we were in. But an extra $1,000 to $2,000 every 10 days. So that's every 2 weeks. I am happy with that. I know I can build wealth in the long term, and that's what day trading for me is about, along with keeping my long positions. So it's a great way to make side income, and that's why I do it. So let's come back to November 17th, and this is not your typical break up candle, but remember I said this. So let's bring this trend line over here. Right, these were clear areas of resistance. Okay, you can say here, maybe we can bring this down a little bit, right? Maybe we can say more like, I think there's more to say here. And on the 17th, this is the reason why I wanted to buy, right? Is because we came above. This is just the perfect setup, and that's why I was like, I'm going to buy 30. I'm like, no. I'm going to buy 60, because we came above this, tested, and we stayed above all afternoon, and then we tested again, and we closed above it roughly. Like, you could move this line up and down, but roughly in that area, it's pretty good, right? Like, it's in above the opening price of this breakdown candle on November 5th. And that's why I said I'm going to buy 60. And even if you bought 60, at the close, right here, you wouldn't have got stopped out because the strategy is here. If we would have closed below here, I talked about this in that video as well. We didn't. So regardless as where you got in here, you would have to hold overnight, obviously. But we were saying that this is the target, is to fill this gap, and we can still get there. So 280 is the ultimate target. We'll see. Right, gaps tend to fill themselves. I'm not going to be surprised. So if I'm still holding my 30 shares, I'm not going to be surprised if we do this, though. This is a trade idea. If you take a look at this, 80% of the times gap fill. I don't like using this one. So 250, bammo. If we come into 250 hard and fast, I'm going to be buying here. So what would have to happen? This is like a pretty crazy move. I don't know if this is going to happen, but at any point in time, because this is it's a $10 move, so maybe it's not that crazy, but Moderna does move in $10, $20 increments. But if we gap down, and then within the first 30 minutes, 45 minutes of the day, we come into this area here, I'm going to be buying at 250. It's a different story if we gap down here. If we gap down like $10, that's a different story. I'm not going to be buying that. We have to come down, just open up and just sell off right away into this number. That's a huge move, but if we have that velocity, that sell off, and we fill the gap, 250 is definitely a buying area. That's one move. Otherwise, I'm just keeping my 30 shares so far, because that's gonna, if we can get up here into the 280, that's another $20. So I don't want to be out of a position that is working for me. If this is the bear scenario. Let me bring this line here, so we can maybe do this. Here we go. At any time, so maybe this is the bear scenario of where I would be shorting it. So you can say this is a trend here, and I'm going to leave this here for on Monday, because if we gap below here, I'm going to wait for the 15-minute candle close, right? But this is going to be tricky here because we could hit some support at 250. 250 is a good number. There's a gap here. So if we do have, I'm probably not going to do anything. I'm probably not going to do anything because of, this area is now a support area. It's 250, which is a whole number. So it's checking some boxes. I might miss out on a trade, but I think that, I would rather probably buy here. And then if we start closing below 250 on an hourly basis, I would exit my position. So we come down here, we gap down, we come down here hard and fast. I'm going to buy, even though that we come outside of this trend line, just because of where this is. And I think 245, right? If we start closing below 245, that's probably where I'm going to take my profit. So usually I like shorting this breakdown area, but because the reason why I'm not going to do it is because we've come down so far so fast. I'm not interested. So let's in this situation here, I think we've shorted this situation over here, right? I'm sure we've come up here, and right when we broke through here, there was a huge sell-off, and I think this was actually a trade that we did, if I remember. That's why I remember that it's here. But right, it broke that trend, and then we had that breakdown candle. What do? We short the breakdown candle. Yeah, that's a lot of risk, but it broke. It's the first time that it breaks with speed, volatility, and some strength. Right? We had some follow through $7, $10. We had $15 follow through from 430 to 415. And then we had it happen again here, right? You have this slow grind up, gap down, and then we trade it away. So that can happen, but we're in a different area, so I'm not interested in doing that right now. Could I be wrong? I definitely could be wrong. You know, we are in a downtrend, but I want to fill this gap here. And I think that let's go back to where I was. Definitely think what is like the daily candle like on this? Yeah, I wouldn't be surprised if we come down. But that's my play here, and that's going to be an intraday trade. I'm going to buy this gap fill, and I'm going to look for a $3 to $4 bounce, and that's going to be the play, because we can seriously, this looks like a situation where we go like this, we gap up, and then we just come back down, we form a double bottom for another rise. But we'll see when we get there. We're playing it day by day. So before I end the video, I just want to make it clear of what the strategy is. Right, we're still looking for the gap fill, so the target is right. We just missed it. So it is what it is. That's a little bit of weakness. That is a red candle, but you know, 276. We just missed it. That's what I like about this. It is what it is, but that's your target, right up in here, 275, 280. And we're not there yet. We missed it today. We can have another gap up on Monday. We will see. And then if we zoom in on the 15-minute, if we come down to 250 hard and fast, it'll be a buy for intraday trade. Right. And the trade that we've been liking a lot is if we gap up here at 267 and we come down to 263, it's a buy, or 265. It's going to be a buy. Why? Because we can manage our risk fairly well. So this is what, $5, 2%, right? So if we start closing below the lows on an hourly, like 15-minute candle close, half-hour candle, an hourly candle close here, then you can just exit your position, right? And if in this scenario we gap up, we come down, and we just actually keep going down, and we close down here, you just go in your account, close it. But you can take the trade here, and then you can, if you're conservative, you can wait and take the trade down here for 250. And if you do see that we end up gapping below here, this is, I would say, the riskier version. If you see us gap down, you can just short it on the open, but that is the risky, and that is, you know, assuming that it's gapping down to fill the gap down here. But that would be the riskiest. I'm not doing that. I'm going to wait for the gap up, come into the closing price, or sharp sell off to 250, buy there. Either way, we're only risking $5 in both scenarios. I think that's a great risk reward, positioning. So thank you for watching. I'll see you tomorrow.